ChatGPT just hit 700 million weekly active users. OpenAI is about to launch GPT-5.6. And yet, the company's market share just fell below 50% for the first time in history. Welcome back to AI Assets. That combination of facts tells you something extraordinary about the AI market right now. And understanding the gap between those two numbers may be the most important edge an AI investor can have heading into the second half of 2026. Let us break it all down. Here is the number that matters most. 700 million weekly active users. Not monthly, weekly. That is roughly double the entire population of the United States every single week actively using a single product. For context, it took Instagram 6 years to reach 700 million total users. ChatGPT reached 700 million weekly actives in under 3 years. And the growth is not slowing. ChatGPT added more users in the first 5 months of 2026 than in all of 2024. The platform is now growing faster in absolute terms than at any point in its history. This is the paradox of OpenAI's position right now. The product is bigger than ever. The user base is growing faster than ever. And yet, competitive pressure has pushed market share below 50% for the first time. That paradox is exactly where the investment opportunity lives. Now, the investor context. Here is why this matters for your portfolio right now. OpenAI is preparing for an IPO. The valuation target is above $300 billion, and some reports place it as high as $852 billion. That valuation has 2 legs. The first leg is market share. If ChatGPT continues losing ground to Gemini, Claude, and open source models, the premium pricing argument weakens. That is the bearish case. The second leg is absolute user growth. If ChatGPT is at 700 million weekly users and still growing, the total addressable revenue, even at declining market share, is staggering. That is the bullish case. GPT-5.6, expected before the end of June, is OpenAI's attempt to collapse the gap between those two narratives. A meaningfully better model means higher user retention, higher conversion to paid tiers, and a stronger benchmark story for institutional investors evaluating the IPO. For Microsoft investors, the math is even more direct. Microsoft owns 49% of OpenAI and has deployed hundreds of billions in Azure AI infrastructure built around OpenAI models. Every user who pays for ChatGPT Pro at $200 per month is a direct revenue event for Microsoft. At 700 million weekly users with a paid conversion rate even in the low single digits, you are talking about billions in monthly recurring revenue flowing through that relationship. For Nvidia, 700 million weekly users generating AI responses in real time means massive, continuous inference compute demand. Stronger models require more compute per query. GPT 5.6 will drive higher GPU utilization across every OpenAI data center globally. That shows up directly in Nvidia's data center revenue in the late July earnings call. Here is what the market is completely missing, and this is the most important part of today's analysis. Everyone is debating whether ChatGPT is winning or losing the AI model war. That is the wrong question. The right question is, what does 700 million weekly users actually mean as a distribution moat? Think about it this way. OpenAI has embedded ChatGPT into Microsoft 365, which has over 400 million commercial users. It is pre-installed on hundreds of millions of devices through the Microsoft partnership. It has API integrations in tens of thousands of enterprise software products. The GPT plugin and operator ecosystem now exceeds 10,000 third-party integrations. That is not a chatbot. That is distribution infrastructure. Even if a competitor builds a model that outperforms GPT-5.6 on every benchmark, and several already do in specific domains, dislodging 700 million weekly habitual users from embedded workflows is an entirely different challenge. Distribution moats in software are historically more durable than technical moats. The market is pricing OpenAI as if it is purely a model company competing on benchmark scores. It is actually a distribution company with the largest installed base of AI users in history, and those users are about to be upgraded to a more capable product. That reframing changes the IPO valuation calculus entirely. So what happens next? Here is your concrete roadmap. The first date to watch is late June, specifically the GPT-5.6 launch. If OpenAI hits its target window, it arrives while Anthropic's Fable 5 and Mythos 5 are still suspended by US government order. That means GPT 5.6 launches against a field where its strongest frontier competitor is offline. Benchmark performance against Gemini 2.5 Ultra will dominate the narrative, and any meaningful capability gap in OpenAI's favor will immediately strengthen the IPO valuation story. The second date to watch is July 14th, the June CPI print. If inflation surprises to the upside, Fed rate hike probability increases and high multiple growth stocks face compression. OpenAI's IPO window is sensitive to rate expectations. A hot CPI print could push the IPO timeline into Q4 and change the entire positioning strategy. The third date to watch is late July, Microsoft and Nvidia earnings. Listen specifically for two metrics: Azure AI revenue growth rate and any commentary on ChatGPT usage patterns within Microsoft 365. If Microsoft reports that ChatGPT Pro adoption inside enterprise accounts is accelerating, that is a direct read-through to OpenAI's monetization trajectory and IPO valuation support. The smart positioning here is not a binary bet on whether OpenAI wins the model war. It is recognizing that the combination of 700 million weekly users, a dominant distribution infrastructure, and a near-term GPT 5.6 catalyst creates asymmetric upside for Microsoft, Nvidia, and ultimately OpenAI's own public market debut. The user base is the moat. And right now, that moat is wider than almost anyone is pricing in. If this gave you an edge today, hit subscribe to AI Assets. We publish daily analysis on AI stocks, infrastructure plays, and the investment moves that matter before the market catches up. See you in the next one.